Wanted to share another financial literacy tidbit with you. We talked on yesterday, and I focused primarily on credit cards, and that's going to be the focus for a little while. Something came to my mind. I said I wanted to definitely share with you, especially during this time of tax season. You know, a lot of people are going to be getting that check and wondering what to do with it. A lot of folks are going to run out and try to get cars, But I wanted to just kind of give you some information concerning that. With your credit report, which is a very important instrument, basically gives information concerning your history, likelihood to pay, and things of that nature. Cars that you've had for a while, new cars. It gives all of that information in a report form, and that's important to you because lenders are going to look at it and make determinations on whether they're going to give you a loan, what kind of interest rate they're going to charge you, and how much money they're going to charge you. So your credit report is very important. Your credit report is generally where your credit score comes from. So the things that are on your report go towards them determining what your credit score is going to be. Now there are three main companies that report. There's Equifax, Experian, and TransUnion. So you may have three different scores from three different companies and three different reports that have most of the same information but may have some different information. So we're going to talk about a lot of those things, but what came to my mind, I wanted to mention to you that there are 5 major things that we're going to be focused on that you need to be interested in as concerning what makes up your credit score. They're looking at your payment history. They're looking at your credit card utilization, basically how much of the money that you have available on your credit cards you're actually using. They're looking at hard inquiries, and there's a difference between a hard inquiry and a soft inquiry. We're going to talk about that a little bit more. They're looking at your history, basically how long have you had credit cards? How long have you been using credit cards? They're going to look at that history, and they're also going to look at the balances. How much do you owe right now on your credit card balances? So all of those 5 factors go into making up your credit score. Now, there are some that are, rate higher as far as more impactful concerning your credit report than others. Your payment history, how have you been paying? Are you paying, 50% of your bills? Are you making a bunch of late payments? How are you paying? What is your payment history? Is the most important. They want to know if we put money out there, are we going to get it back according to the agreement, according to the date that we set for them to send it in. One of your least impactful things, which is what we're going to talk about today, is your hard inquiries on your report. Now, when you have inquiries on your report, basically that's when you apply for a card or apply even for a bank account, they'll do an inquiry, they'll contact the credit bureaus to make a determination on whether or not, you're worthy of the credit card that you're applying for, the loan that you're applying for, or if you're going or high risk, even for something that's opening up a bank account. So they pull your credit report, and when they do that, it's going to be one or two different types of inquiries. It's either going to be a hard inquiry or a soft inquiry, or what some people call a soft pull. And basically, that would be if I pulled my credit report, that would be a soft pull. I'm not looking for new credit, I'm not trying to get anything, I'm just looking for information. So with a hard pull, that's usually when you're trying to get a loan, you're trying to get a new credit card, you're trying to get something, and that person who's going to make the determination is trying to get information, is going to give you more credit or not. So it's a hard pull. Even if you don't get the credit card or the loan, it still goes on your credit report as a hard pull because of, like I say, the reason behind them pulling it. Now, you don't want a bunch of hard pulls on your credit report. Reason being, even though it's least impactful to your credit score, it still impacts your credit score. And you'll find that when you have hard pulls on your credit score will, trickle down. Now, it may be a week, it may be a month, the thing will, recover from it. But if you're trying to get something, you don't want a bunch of hard pulls or hard inquiries pulling your credit report down, because as you continue to go out and try to achieve things, whether it's a mortgage or a car loan, whatever, you don't want your credit score steadily decreasing because you went to one mortgage lender, they turned you down, then you have to go to another one, they turned you down, go to a third one, they turned you down, or giving it to you, but your credit score will have trickled down from what it was to where it is when that third company looks at it, and you don't want that. So, with that being the case, the reason I'm bringing all this up as concerning hard inquiries and bringing it to your attention is because, like I said, during this tax season, people are going to be out looking to get cars. Well, one thing that I found, and I had this situation come up, really attacked my credit score. I went to Ford and was trying to get a truck. And what am I doing in a truck? I don't ride trucks. But anyway, I was doing something. I didn't know that when I put the information out there that they were going to be shopping my credit worthiness around to as many different folks as they could until they came up with a lender who would loan me the money according to the terms that I felt good about, you know, a good payment or whatever, interest rate, and then went on and signed to get the truck that I had no business trying to get anyway because I don't ride trucks. But, not that there's anything wrong with trucks, but the credit score that I had was steadily coming down. I didn't know that they shopping it around to all these different lenders or whatever, you know, steadily chopping my credit score down. So, wanted to bring this up because I know that, you know, a lot of folks are going to be out there. And, you know, I've done bankruptcies before, helped people with bankruptcies. And I would see this particular company come up, Santander. And Santander would be on, you know, a lot of the bankruptcy clients that I would deal with. And it never triggered my mind that, okay, these people are suffering in their credit because by the time it gets down to Santander, that car person has shopped your credit around to like 5-10 different lenders. And Santander is, you know, they're basically dealing with those folks who have, you know, bad credit, are really in need of, you know, somebody to look out for them. And by the time it gets down to Santander, you know, they done hit your credit with about 5-10 hard inquiries. Just wanted to bring that to your attention. So be mindful of the fact that, you know, those hard inquiries are going to come. They're going to chop your credit score down. And it may be harder for you to get good rates. You know, you may start at one credit score, and then by the time you get a loan, it's at another number. And you're wondering, well, why is that? I'm telling you why. All those hard inquiries are hitting your account, knocking your credit score down, and it's causing, you know, you to be looking at higher interest rates in the loans that you do actually get. So just a tidbit, wanted to share with you something from my past, something from my experience, something that I learned. We're going to talk about the other 4 different points that go into them figuring up your credit score, but just wanted to give this to you today.